The tax laws of this country are a disgrace to the human race.
Our tax system could only be described as un-American.
Read my lips. No new taxes.
Taxes. They are by far one of the most certain things you will experience in your life. Irrespective of what stage you are at, you will pay taxes whether you earn it, spend it, save it, or even invest it.
We don't need a tax code that rewards wealth more than it rewards work.
He wants to terminate the tax cuts that we gave you.
Joe Biden has been very clear. He will not raise taxes on anybody who makes less than $400,000 a year.
He said he's going to repeal the Trump tax cuts.
Mr. Vice President, I'm speaking.
Taxes are also one of the most emotive and controversial topics of our society since the dawn of time, and hotly debated by various personalities and government figureheads. It is often a balancing act of how much individuals and corporations are willing to pay.
Tax reform is sorely needed in this country.
Versus how much governments are willing to take and then eventually spend.
While I have chosen to freeze personal tax thresholds.
So in this video, I'm going to be talking about tax efficiency as a concept and what are the 3 ways in which we can be tax efficient in the new tax year. Hello and welcome to The Nimble Nomad. My name is Arjun and this is the channel where we talk about money related tips, tricks and hacks to survive and thrive in the UK. As the new tax year rolls around on the 6th of April, YouTube gets flooded with multiple videos about ISAs and what is the best kind of ISA for you to open.
Today we're going to take a good look at the stocks and shares ISA.
Stocks and shares ISAs are the best way of investing money in the UK.
Lifetime ISAs. Some people call them a LISA, other people call them a LISA.
So today I actually want to pare it back a little bit and I want to talk about a controversial but very important topic of taxes and where we can be a bit more efficient with our annual tax bill as individuals. I promise you this video is not another video about ISAs and what is the best ISA to open. So many of us are really focused on growing our wealth in the form of saving, earning and investing our money. But one of the things that we can forget in that process is that a significant proportion of what we earn and invest actually gets taken away from us in the form of taxes. Now, what if there was a way of being more efficient? So just simply taking an example, just like how when we have a car or a home, there's a legal requirement and an obligation for us to have insurance on that asset. The same way when we earn money or even spend or invest money, we must pay taxes. But with the example of insurance, you wouldn't just go and buy any insurance, the most expensive insurance. You would try to be more efficient with your costs. In the same way, we can be a bit more efficient with our taxes. So I want to explore that in this video.
What Panama has shown more than anything is that there's one rule for the rich and one rule for the rest.
When people talk about reducing their tax bill or reducing the amount of tax that they need to pay, a lot of people often confuse this with the terminology of tax avoidance. Now, I want to clarify that this is actually different from being tax efficient. So before we actually get into the 3 simple strategies that we can employ, let's actually explore the differences between tax efficiency and tax avoidance. So let's look at tax avoidance first. Tax avoidance is where an individual or company utilizes tax systems to legally minimize their tax liabilities, for example, contributing to a pension scheme or incorporating and trading from a tax efficient jurisdiction. Where structures are set up correctly, these ensure that the person or company pays as little tax as possible while staying within the letter and spirit of the law. Now let's look at tax efficiency. Tax efficiency is what a majority of people are actually trying to achieve. It is understanding the best ways to legally make the most of your personal and business income that is key to your individual success. There are a number of ways to make sure your income is as tax efficient as possible, and as a result, ensuring that you maximize your income. So my personal view as far as taxes are concerned is to not only stay consistent and within the requirement of the law as it is written, but also the spirit with which it was written. So whilst both approaches technically are legal and correct, I prefer to go down the route of tax efficiency, because personally speaking, I actually enjoy living in a developed country where I can see that my taxes are being used in the form of free healthcare or to fund great roads or education which my children in the future could actually receive. So which now brings me to the point of how can we be more tax efficient in the new tax year? So the first way to be more tax efficient in the new tax year is to get married.
I'm also just a girl standing in front of a boy, asking him to love her.
Jokes aside, the UK government has a special tax break which is called the marriage allowance. So this is actually a tax break which is assigned to people who are married or in a civil partnership and are on the lower end of the wealth and earning spectrum. So the way this works is every individual in the UK is granted a personal allowance. Now, a personal allowance is basically the amount of money that you can earn in a tax year, which is tax-free. So in the new tax year, this is going to be £12,570. And what this marriage allowance basically allows you to do is you can transfer a proportion of the personal allowance to your partner up to the tune of £1,250. So let's work this through as an example. So you are married or in a civil partnership and your income is £11,500 and your personal allowance is £12,570. So you don't actually pay any tax. Your partner's income is £20,000 and their personal allowance is £12,570. So they pay taxes on up to approximately £7,500 of their taxable income. This means that as a couple, you will pay tax on £7,500. When you claim marriage allowance, you can transfer £1,250 of your personal allowance to your partner, and your personal allowance becomes £11,250, and your partner gets a tax credit of £1,250 of their taxable income. This means that you will only pay tax on £250, but your partner will only pay tax on £6,250 now. So this is approximated again. And as a couple, you benefit as you are only paying income tax on £6,500 in total, rather than the £7,500 which you would have originally paid, which saves you approximately about £200. So it is important to remember that actually you can only claim marriage allowance as long as one person is below the personal allowance tax threshold and the other person in the couple does not have an income which is above £50,000. This is extremely important. And the other point to remember is that you can only claim this marriage allowance if you are actually married, as in a husband or wife, or in a registered civil partnership. So if you aren't in any of those situations, you will not be eligible for the marriage allowance. Okay, so the second strategy, I know I promised this was not another video about ISAs and what kind of an ISA you should open in the new tax year, but I want to take home the point on how you can be more tax efficient through an ISA and why you should own an ISA. So let's actually, before we look at that, let's quickly look at what the media actually says about rich people and how they are more tax efficient.
To tax the wealth, the billionaires.
I'm talking about people who are already phenomenally rich during this pandemic becoming much richer. So what I have done is to bring forth a pandemic wealth tax.
That in the last few moments, the first results have been released following an investigation of one of the biggest ever leaks of offshore secrets. 13 million documents, mostly from an offshore law firm called Appleby. Well, they are known as the Paradise Papers, and they reveal the tax affairs of rich and powerful people around the world.
Rich people don't pay any taxes. And what if there was a way in which we could actually use some of the strategies that the rich people use in order to be a bit more tax efficient with our annual tax bill? To explain, let's take a simple example. In 2020, Warren Buffett's Berkshire Hathaway, which has a significant holding in Coca-Cola, earns $656 million on the dividend income from Coca-Cola stock. Now, if you compare that with James Quincy, who is the CEO and chairman of Coca-Cola, his annual compensation from just his job would be approximately $18 million. Now, to put this into perspective, let's say Warren Buffett had all of his holdings within an ISA. Technically, he would not need to pay any taxes on the income that he earned on the dividends. And this is exactly the reason why having an ISA is absolutely crucial and critical for us as individuals in order to be more tax efficient. So think about it. If you had a ISA, an investment through the stocks and shares ISA, and that stocks and shares ISA was paying you a dividend, you do not actually pay a single penny in taxes on that. And as your investments grow in the form of dividend income, in the form of the amount that's invested or the capital, were you to sell those investments and pull that money out, you would not pay a single penny in taxes. So my point is, rather than having your money lying around in some bank account which is going dead because inflation is killing it, or investing it through some general invest account, I think the main thing that you should definitely consider in 2021 is opening an ISA for yourself. Of course, the other thing that you should not forget, and I've done a video about this, is consider opening a junior ISA, because it adds on an extra £9,000 for your kids on tax-free allowance, and you can put money into that, and that money is also tax sheltered as well for the future. Okay, the third option is a work from home tax relief. Now, I did a video about this a couple of months ago, and it went into a lot more detail, but the basic rule of thumb is that because of the current situation with coronavirus, a lot of us have been working from home for the last year and something, and basically in that process the government has said that you get a special tax relief because you're working from home and you may have had office related expenses. So basically you can claim up to £6 per week, which net effectively works out to about £140 if you are a higher tax earner. Now, the rule of thumb applied for the previous tax year, which is 2020 to 2021, and that has actually been rolled forward and extended up until the 5th of April 2022, so applies for the next tax year as well. So there is a simple web form which the HMRC has developed. If you haven't already claimed your work from home tax relief and you have had to work from home at least on one occasion throughout the entire tax year, then you could be eligible for up to £140 back in your in the form of a tax relief added straight on to your tax code, which gives you a benefit in how much you earn. So I would really urge you to go and fill that form out. In case you're curious about this and understanding more detail, I'll add a link of the video that I did in the description below and in the cards there, so you can go and check that out when you want to. So that's all I wanted to talk about in this video. I hope this video helped you out. I really do want people to take their tax bill a bit more seriously and be a lot more tax efficient, because we pay taxes on almost every single thing. If this video helped you out, please smash that like button and don't forget to subscribe, and I will see you in the next video. Goodbye.